Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to everybody. Today we'll be looking at the trendline breakout strategy. It's a common strategy most people want to learn, but they don't know how to trade it in a good way. So when they open their chart and they trade the trend line, they always get a lot of losing trades. But because there are some things they did not know, that's what I want to show you today. So if you want to use the trend line as your tool, or you want to trade the trend line breakout strategy, then follow my steps, and then you'll also be able to trade trend line successfully. So trend line can be traded in two ways. It can be traded using the trending market or the reversal. So if you want to trade the trend line using the trend market, all what you have to do is that you draw your trend lines across, and then when market touches any of the trend lines, you buy or you sell. To be able to trade trend line breakout successfully, you must follow simple steps. The first step you have to do is that first you must identify your trend line. So first you draw your trend lines across all the support areas, anywhere the market has touched. If you're using to trade reversal, so all the support areas, you draw a trend line across. The second thing you have to do is that you wait for the market to break the trend line structure. So you can see that market moves in structure. So wait for market to break the trend line structure. I mean, this side is not there. So when the market breaks the trend line structure, what you have to do is that you draw your horizontal line, or you draw your rectangular tool, and then you wait for the market to break out of the whole trend line. After the market break out of the trend line and break out of the rectangular tool, what you have to do is that you wait for the market to retrace back. When the market retraces back, you are waiting for a confirmation. If the market gives you a confirmation, then you take your trade. If the market does not give you any confirmation, don't take any trade. At this point, I wouldn't have taken any trade because I can see that I don't have a confirmation pattern here. So market did not give me any confirmation pattern at this side. But as you can see, when market went up and reversed, so market went up, but when it reversed and came back, market came back to the same zone. And as you can see, the same zone, the market gave the same confirmation I was waiting for, the bullish engulfing pattern. Can you see the bullish engulfing pattern? Yes, so that's where you have to enter. So you enter at the bullish engulfing pattern, you place your buy order here, and then you place your stop loss below the pattern, and you take profit 1:2. You take profit 1:2. Always make sure your take profit is always 1:2. So let's recap. The first step, what you do? The first step, you draw your trend line. So first step, you draw your trend line across. Second step, what do? You draw your horizontal line across. So you take a horizontal tool and you draw your horizontal line across. The third step, what do? You wait for the market to retrace back and give you a confirmation pattern. If the market does not give you a confirmation pattern, you don't take any trade. Here, market did not give us a confirmation pattern, so we did not take any trade here. But at this point, when the market came back, market gave us confirmation pattern. So you put your buy entry here, your buy order here, your stop loss below the pattern, and you take profit 1:2. Trading trend line breakout is very, very simple. But if you don't know what you're doing, then when you enter the market, you're going to have a lot of losing streak because you don't know when you are supposed to enter, when the market breaks out of the trend line. People don't even know that the trend line breakout is a reversal pattern. So they just think they've heard of trend line, they just want to use trend line. But trend line breakout is actually for reverse, for the market to reverse. And for the market to reverse, which means that one currency must be what? Very stronger than the other. That's when the market can reverse. So maybe the market has been trending for some time. So maybe you merge the CAD and the yen. Okay, example, CAD yen, and CAD yen has been trending for some time. Before CAD yen can reverse, which means the yen must be rather stronger than the CAD. So when you check your currency trend meter, as you all know that I trade with the currency trend meter. So when you check the currency trend meter and you realize that the yen is now stronger than the CAD, which means it's likely the currency pair is going to reverse. It's going to have a trend line breakout. It's going to break out of the trend. So what you have to do is that you watch your currency trend meter carefully. You wait and notice that the CAD is now weaker and now the yen is strong, which means that currency pair is ready to reverse. So you look for the charts and then you draw your trend line across, and when the market only breaks out of the trend line and then reverses back and gives you a confirmation pattern, then you take the trade. But there is something else you have to know. To trade the trend line breakout strategy, you must also know market structure. What is market structure? On the chart, as you can see, let me clean this, guys. On the chart, as you can see, when the market was trending, you can see that there were areas where the market got rejected, right? that is market structure. Areas where market got rejected, that's market structure. So you realize that when the market come back to that zone again, the market makes a reaction. So as we are supposed to extend this line back to where they are, you can see that there will be a point where the market makes a first rejection around the first point. Can you see the first zone? This was the first zone, the latest low, okay, the latest lower high, and then so you just put your horizontal lines along this side where they were lower highs. I prefer the lower height, okay. That is where this structure benefits for the trendline breakout strategies. So you have to draw your trend lines across, and then you draw your horizontal line across the lowest, okay, the lows of the whole structure. So as you can see, the low of the whole structure, this where the next low is here, and then so 3 lows. You can even have 4 from the first point. So what you have to do is that now you draw these lines across, because market is going to react at that same level again. So can you see when the market came back, it's reacted. When the market was able to reach this side, did you see any reaction? No, but assuming this was the low, this was the lower low, go. This was the latest low. Can you see when the market made to this side, though it couldn't reach here, but did you see the serious reaction here? This side, this was the low here, and when market also got to that zone, you could see that market was trying to make a reaction here. Can you see? So zone, and we entered here. This is where our entry was. Our entry was here, and we entered here. As you can see, when the market got back to the last zone, the market reversed quickly. Why? Why did the market reverse? Because at that particular zone, it was a very important zone that everybody was watching. That's what we call demand and supply zone. Everybody was watching. So they were watching at that particular level because that was the last zone that market could have gotten to. Most of the time, the market will not get to the last zone. So if the market was able to make it to the last zone, every seller is waiting. They are waiting for the market to get there, and then they will sell. So before you can trade trendline breakout strategy, you must understand market structure, how the market is structured, lower lows and lower highs, lower lows and lower highs. If you don't know this simple concept, then you cannot trade the trendline breakout strategy. So first, what do you look for? Look for the trend market. Second, what do you look for? You draw your trend lines. Third, what do you look for? You look for the market to break the trend line. Fourth, before you enter the market, what do you look for? Wait for the market to be traced back to the horizontal line where you've drawn with using your horizontal tool or your rectangular tool. And fourth, make sure before you enter the market, check the currency trend data to see that currency pair, it was trending and now it has reversed. As I use the CAD yen, for example, if CAD yen, Canadian dollar was strong and the yen was weak, and then they are all trending, you could notice that over some time, now the yen will rather take over the Canadian dollar, which means the yen will become stronger than the Canadian dollar. That is only when you can trade reversals. That is only when you can trade reversals. If you don't know what is happening in the market, don't trade reversals because you have no idea. How do you know that the market will just break and continue trending? It happens most of the time. I'll show you another examples. So sometimes you have to be very careful before you can trade any form of reversal. You have to be very careful because the market can not even reverse quickly. Sometimes the market can just act as if it's reversing. It will break out of the trend line and then it will continue. So before you trade reversal, make sure that currency pair that you are trading, as I said, the CAD yen, let's say the yen was a weaker one. Make sure that the yen has now become stronger than the CAD before you think of even trading reversals. If not, you're going to have a lot of losing trades using the trendline breakout strategy. So let's see another example here where the market broke out of the trend line but still continued to trend. So as you can see on the charts, as you can see, the market was trending beautifully. So what were you thinking of? Most people were thinking of, yes, market has broken out of the trend line, right? But this was a big break. So you wait and you draw your horizontal line at the least low, wait for the market to retrace back, and then you buy. Fine, you could have still gotten a winning streak here, but look at example here. Look at what happened. The market continued to trend down. Can you see? The market continued to trend down. The market was still trending down. So assuming your profit target is not that far, your profit target is not far, you're going to have a lot of losing trade because assuming your profit target, you decide to enter somewhere here, and your profit target is far away, and you are not touched, you're going to have a lot of losing trade. Though it worked, but be careful because if you are trading and your profit target is far away, then you cannot reach your profit target. You're going to have losing trades. So make sure that before you enter market reversals, make sure that the currency pair that you're trading, the other one is now stronger and the other one is weaker now. If not, the market can reverse and go against your direction. It worked, but most of the time you have to be very, very careful. So always check your currency trend meter. The currency trend meter is a magic tool, okay? It's a magic tool for we day traders because it tells what is happening in the market. Most of the people just open their charts without having the background knowledge of what is happening in the market. And they open their chart, they get a lot of losing streak because why? They don't know what they're doing. Okay? So open your currency trend meter. Anything you are trading, make sure you begin with the currency trend meter. The currency trend meter will tell you what is happening in the market before you even think of trading. Let's see another example here. So another example you can see is this side. As you can see, at this particular moment, the market was trending beautifully. Can you see? The market was trending beautifully. And the market was making higher highs and higher lows. Higher highs and higher lows. So trending very beautifully. Can you see? Very beautifully. So what are you looking for? You're looking for a point where the market breaks out of the trend line. So the market breaks out of the trend line. And then what do? Look for the latest low. What was the latest low? Latest low was this side or this side? Yes, this side. That's the latest low. I also use this side. It depends on how far the market breaks. So you wait for the market to retrace back to any of the zone. As you can see, the market did not reach there. Can you see? The market did not reach there, but you can see that it gave us a confirmation pattern here. So because of this particular zone, they were all rejection. The market gave us a confirmation pattern even before the market reached there. Can you see? The bearish engulfing pattern. That's the bearish engulfing pattern. So you enter here, you enter your sell after the bearish engulfing pattern, and then you put your stop loss below behind the structure. You take profit always 1:2. Always 1:2, the next structure. You see, market go there beautifully. When the market also comes back and give us confirmation pattern again, you can also still enter the trade. For instance, assuming you did not get this trade and the market came back to this zone. Let's say the market continued to come back to this zone. You waited for the market to come back to this zone. Can you see the same pattern here, guys? Can you see the same bearish engulfing pattern? You find a bearish engulfing pattern here. Can you see? Bearish engulfing pattern here. You put your buy entry here, your sell entry here, your stop loss behind the structure. You'll take profit 1:2. Always take profit 1:2. And then you're out of the market. You don't care how far the market goes, okay? Always when you enter the market, you don't care how far the market goes. If the market is going to go to the moon or rocket to the desert, you don't care. All what you care is what? You take your profit 1:2, you're out of the market. So the same way market structure also applies here. So let's see the market structure here. You can see that we had lows, and the first low the market had was this low. Can you see? Market came back to the same zone and made a reaction here. Can you see? The second low we had was this guy. And as you can see, market came back to the same zone and made a reaction. What is the third zone? The third zone is this side. Can you see, guys? Third zone, this side. As the market continued to come here, you see that the market made a reaction, but the market could not reach there. It reversed back, which means that always draw your zones. Every time, make sure you draw your zones. If you draw your zones and the market reverses to that zone, you can use them as a good entry or a place to take your profit target. Or profit target 1:2, you're out of the market. So you enter the market quickly, you take your profit 1:2, and you're out of the market. Don't care whatever happens. Okay, you enter here, you take a profit here, and then you stop loss here. If you're hit, you're out of the market. You get out of the market. If you're not hit, then you still join the market. So trendline breakout can be traded successfully if you understand market structure. That's number one. Number two, if you understand support and resistance. Number three, if you understand currency strength meter. Because if you don't understand currency strength and you can't match the strongest currency with the weakest currency, then you're going to have a lot of losing streaks. Currency strength meter, as I always say, is one of the most powerful tools you can use as a day trader. It's free, you can get it online, you can get it everywhere. I even put the link here. So if you want to know how to use currency strength, I have a dedicated video about currency strength meter alone. So one, you must understand market structure. Two, you must understand what? The support and resistance zone where the market will break and reverse. Three, you must understand the currency strength meter, how the currency is strong. So the cardian example I was using, for example, let me just summarize it. I'm saying that before you can trade a reversal pattern, make sure that the currency that you're trading, one, it was trending. So let's see, the Canadian and the yen was trending, right? It was trending. Which means if it was trending, the Canadian dollar will be stronger, the yen will be weak. Which means the market will be trending, either trending upwards or trending downwards. Now, if you want to trade a reversal, make sure that the weaker currency is now stronger, much stronger than the other currency, because at first this guy was strong, so it was riding this guy to the other direction. Now, the other guy must also be what? Stronger before you can even think of taking the trade. So trendline can be traded successfully if you understand currency strength, if you understand market structure. can be traded successfully if you understand market structure. So make sure you get your market structure in point, okay? Make sure you draw your lines perfectly before you even think of entering the market. So that will be all for this video, and I hope you've learned a lot. You've learned how to trade the trendline breakout strategy. Go to your chart, okay? Go to your chart and test them. Don't just learn strategy from anywhere and just go and put your hard-earned money on the market. No. Before you think of even trading any strategy, it's just a concept I'm trying to explain. Before you think of it, one, you must master it. Two, you must practice it. Practice and master before you even think of putting your money on the line to trade the trendline breakout strategy. So go to your chart, open your chart, practice it, try and backtest and see how many times did this strategy win, how many times did you lose. Don't just blindly be buying and say because you've heard a YouTuber or somebody on YouTube just saying that there's a trendline breakout strategy, so it was nice for you, and then you go to your chart and you start trading. Guys, this video, because I want to explain to you, I took only the part where the market was perfect. But what if on your chart you meet an environment where the market is not perfect? What if you didn't even know that you can have losing streak and have winning streak? You didn't know, right? You didn't know that at least some of them will be losing, some of them will be winning. So you have to backtest to master the whole strategy. If you don't backtest, you cannot master the whole strategy. So backtest and master the whole strategy before you think of buying and selling with your money, okay? Buying and selling with your money, backtest it. Whatever you're going to learn on YouTube, whatever concept, because YouTube will teach only the concept. In reality, you face different market environments. So make sure that whatever you learn is just a concept. So when you get the concept, what do? You go to your chart, you test the concept to see if it fits your lifestyle, if it fits your trading goals, if it fits your, if the strategy, it fits the way you want to see the market before you even think of trading the market. But this trendline breakout strategy is very profitable trading strategy, but it's very difficult to trade because one, aside drawing your trend lines, you must know how to switch the currencies to a meter. You must know how to merge them. If not, you're going to have a lot of losing streak. Okay, you must know how to merge the currencies to a meter. Mostly, if you are trading just a trending market, you just merge the strongest currency with the weakest currency, and then when the market just retraces back to a very important zone and give you confirmation, you buy. But the reversal is different. Reversal means that the market must first be trending, and then later when the market is reversing, the same currency which was weak now must be stronger. So I think that would be all for this video. I would like you to share, like, hit the like button, and if you are new here, if you don't subscribe, please subscribe to the channel just to help to grow the channel. Okay. So this is Owa, your mentor. See you next time.